Yeah, workforce housing, data centers, and then there's some AI software SaaS type things like I was talking about, the deterministic AI. We just launched a grant authority.org, which is actually has it has the largest database of grants in the US or around the world. It has 180 countries in there, and that gives people access. Actually has AI driven, so it takes your information and then will connect with the right grant to you. It's all about access, right? Again, it's how can we give back or get money into the people's hands that need it the most and who are doing the most. And that's for-profit churches, hospitals, and nonprofits. So it's pretty awesome. I'm actually pretty proud of how that turned out.
Oh, that's really cool. And what do you like as far as like explaining a little bit of the difference between like a SaaS and software company, what that looks like if you're investing in that compared to a real estate? Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success. How you doing today? Scott Kidd, the Yacht Captain Investor Podcast. Today I have a friend of mine, Jesse Sells, on. He's going to talk to us about his fund and all the things that great things in real estate he's working on. How you doing today, Jesse?
Fantastic, Scott. Thanks for having me on.
You're welcome, man. It's great to see you. Always good to talk to you. For people that don't know who you are, just give us a little background on Jesse.
Yeah. So I started a private equity fund about 7 years ago, focused on real estate for the downward protection, workforce housing, and then the other side of the barbell, I guess you would say, would be the asymmetrical upside. That's data centers, that's AI, that's SaaS. But all that's really kind of stems from impact. It's what are we doing to better people's lives? So in real estate, work with affordable housing, do wraparound services, and then for the SaaS part, it's always about giving more people access to be able to enrich their lives and people around them. I'd say my 20s I spent in the military, did intelligence, a lot of analytical processes. It's very analytical driven and risk mitigation driven, which has really led me into this career field that I've flourished and really enjoyed the last few years.
Really cool. So I guess you'd say that your military career kind of helped build what you're doing here, especially in intelligence, doing a lot of systems. Is probably very helpful with what you're doing today.
Yeah. So intelligence world, it's all about identifying what matters, right? There's a lot of signals, but what do they mean and what do we need to act on? As you know, you get people all the time, and it's like, I got a great deal. And then you realize that no, you have no idea what you're talking about, or, you've never done this before.
Yeah. Or that's a great deal to you, but no one else.
Right. Yeah. Yeah, so it's about identifying that. And then in my career, I got lucky. I got picked up by special operations, and I did what's called foreign internal defense. So learned Arabic. I would go overseas and work with politicians at embassies. I worked with generals. I worked with some princes and drank way too much tea. But it was all to kind of push U.S. interests in the area. Which really so I guess my superpower would be like the analytical side, okay? And then how do we frame that, once we make a decision, how do we frame that to get people around, the right people around, and get them on board with what we're doing?
Yeah, that's great, because that's, a lot of times I've known quite a few people that went in the military and they came out, retired and stuff, and they didn't really have the job that they had in the military didn't necessarily transfer to civilian life, which they told me, said, like, well, probably, I really loved what I was doing, like, as a demolitions expert or whatever. I mean, I guess you could do some of that stuff in construction. We probably need some of that when you're demoing a building or whatever, or something, but there's not a high demand for it. Usually we're building stuff, not tearing it down.
Blowing it up. And not a lot of jobs, not a lot of places will let you blow things up for fun.
Yeah,
unless you're in like Texas and you're doing tanninite in a refrigerator. You ever seen those videos or done that?
Yeah. Or you're working
Yeah.
a mine or something.
Yeah. I remember
Yeah.
doing that as a kid and like put a refrigerator, put some tanninite in there, duct tape it shut, and you shoot it from like, as far away you can. And it just
Yeah.
goes
Yeah.
boom. It's pretty crazy.
Yeah, and then I guess you could really be doing the mines and stuff, I guess, or
Yeah.
mining. There's not a huge amount of mines in the U.S. I guess you got to work overseas, but that's a whole nother thing. What are you currently working on as far as your projects? Any current exciting projects for 2026?
Yeah, absolutely. So moving in a different direction recently because there's so much opportunity. Working with a master plan community in Hawaii, which we talked about before, Scott, which is interesting. Pre-development, so that's still a ways away. Got some rehabilitation of Pueblo, Colorado. It's a large project down there, and then data centers. It's been really interesting. There's so much interest in data centers that I'm actually thinking about opening a fund for just that. Just because I keep getting deals, keep people reaching out to me asking how they can invest in data centers, and it's just a massive, massive market right now.
Yeah, it seems like it varies. And a friend of mine brought up a good point that they're seeing, like in the capital markets, a lot of the capital actually flowing towards these data centers. So they're not necessarily as interested in a lot of the other things, and it's pulling a lot of the capital away from, like, say, your multifamily development, residential development, and other commercial development. Is that what you're seeing?
Yeah, I think the same thing. I think it's a gold rush. So right now, people are getting crazy returns for the first ones to market, and I think in 5-10 years, it's going to get kind of pushed down. So I think people's returns are going to go down, and then it'll kind of mellow out. But for right now, it's definitely a gold rush right now.
Yeah, I just did an article last week, as a matter of fact, on data centers and stuff, and wasn't really necessarily about the capital, access to capital, because it seems like right now that's just flooding towards it, but it was more proximity to power and cooling that was much more important, because the build out for power needs to be is, I think they were saying, 50% over the next 5 to 10 years to just be able to handle those. And they're coming up with some pretty unique solutions. What are you seeing as far as like power generation and for these data centers?
Yeah, it's interesting. Every single one of the projects I see has some kind of natural gas power associated to it. But the really interesting thing that I see coming down the pipeline, probably about, I don't know, I'd say 10 years away, is these miniature nuclear reactors that we're talking about
Yes.
building.
Yeah.
That's mind blowing. I mean, the more you look into it, it's like, man, this is the future.
Most investors don't know where they stand. Introducing Invest with Scott Kidd. Get your personalized investment readiness score. Multifamily real estate builds wealth through cash flow. You'll receive your readiness score, a personalized strategy. Join over 500 investors. Discover if you're ready. Start your free assessment today.
It's the future, I think.
Well, I know in Japan and I believe France, they've had small modular, in certain projects, small modular nuclear reactors for quite some time. And I think that's probably going to be a viable solution, because you can build those. Granted, it takes a while to get those up online. Probably, I don't know how many years. I'm, by means no expert in that, but I would imagine that takes a while, along with the permitting. We have to get used to that. People have to be okay with them being everywhere.
Yep.
But that wouldn't require a huge build out in the grid as well, because it'd be localized. And I spoke to a guy a little while ago. He was doing micro data centers, which I thought were a pretty unique solution as well. Rather than the big giant ones with the giant power, you could have some that had sustainable power plus an add-on of a power center. Are you seeing something like this as well?
Yeah, I've heard of those. I've seen people do like basically a box car as a
Yeah.
miniature one, and then they just park it at their apartment complex that they own, or their backyard, and just have it start
Really?
turning in some money. Yeah, it's real interesting, especially now that we're getting to like liquid cooled and different technology that makes it where they're quieter. So that's a big issue. A lot of these things it's the gas production, it's the fans. It's very, very loud.
Yeah.
The permitting to get those built in city is hard. But these micro ones are really interesting.
Yeah, and I would imagine they're modular so they can stack them together and probably hook them together because I know the cooling is for one is a big deal because that generates a lot of heat and it also pulls down quite a bit of power. But the modular ones where you can move them, because I remember like in the .com era, people were setting up like ISPs in their basements or in their side room or in their garage.
Yeah.
It's kind of a similar thing, only, because everyone had an ISP. When I was living in Austin in the 90s, people were setting them up faster than everything just because the demand was so high.
Yeah. Yeah, I think the demand is crazy right now, and it's going to get worse before it gets better because now we have quantum computers and stuff coming out, and I heard there's now a quantum laptop. I think it's only 20K or something like that. So I don't know who's buying that thing.
Is that all?
Yeah.
In 5 years, it'll be a calculator.
Exactly. Yeah, be on your phone.
Yeah, you'll have it on your phone. Yeah, I mean, think about it. The phones that we have now are bigger than what they are, more powerful than what they used to land on the moon. So, and that used to take up buildings. So, no, it's pretty. The future I think is very, very bright for a lot of these things. And are there any other projects that you see going forward that are going to be that you are very interested in that you're looking at for 2026 and beyond?
Yeah, absolutely. So one of the companies that I work with, let's talk about the problem. So one of the biggest problems with AI right now is there's so much money being poured into this generative AI, which is going to turn into agentic AI and everything else. But the problem is that, and you look this up, most AI platforms, the stuff they put out is about 50% accurate. It's just trying to generate ideas and flows, which is great if you're trying to pick a shirt, which doesn't matter, right? Or get some general knowledge. But if you're trying to make decisions, or you're basing policies, or if you look in the news, a lot of legal, a lot of lawyers, a lot of firms have been sued because they literally just plugged into ChatGPT and it puts out some fake data. So I'm working with a firm right now that's claims that they have a deterministic engine that connects on the back end. So it'll generate it all, and then it'll put it through this engine called the Ralph Wiggum. It's from The Simpsons. You know what I'm talking about?
Oh yeah. Wiggum, yeah.
Yeah, I'm endangered. And the thought process is like he doesn't know what he's doing, but he just keeps doing it over and over again until it's right. So it just keeps circling around. So if you have 5 things you need to prove, right, to fill out an application for something, or that the AI needs to generate, it'll go through it, and if 3 out of 5 is right, it'll say, nope, do it again. And I'll just keep going until it iterates and iterates and iterates and says, okay, all 5 of these are accurate based off the original information. Boom. Now you have a AI and with a deterministic engine that gives you 100% accurate data.
Oh.
Which will kill jobs, by the way. It's gonna be crazy.
Probably, but it'll also probably create a lot of jobs too.
Absolutely.
Jobs that we're not thinking about. I mean, because anytime there's a new technology, there's always this fear that all the jobs are going to go away. But I think a lot of the potentially, white collar jobs will get a disruption initially, but AI is not at the point where it can, build a robot that can do our plumbing or do our electrical or do the actual build of a house yet. Or, now they're looking at 3D printing of houses and stuff. I know in Austin they were doing that, but I think they're still priced pretty high, and they're pretty kind of they're not at scale yet, but they will be. I mean, it doesn't take long for these solutions to come in pretty fast, but that's a pretty intense solution. But again, that's going to take a lot of power, a lot of a lot of cooling and everything else. And if it's not close to where the solution needs to be, then it's probably going to take a while for that to happen. The grid is one of the main things.
Oh yeah, infrastructure is number one. And just think about all the buildings. Anything built before 1985 has those cast iron pipes, too, which are just degrading. So we have a massive infrastructure issue, and those jobs
Yeah.
are never going to go away.
No,
Yeah.
to build to redo a lot of those things, because I worked for a guy one time on one of the boats that he made the bulk of the money that he made. He said the most money that he makes, the bulk of his business was he had these air conditioning units that spot coolers and stuff, and he had a lot of contracts. But he said he made a lot of money in Chicago in the wintertime because these business buildings were not retrofitted. The furnace would kick on, so it needed a cooler for all the computers and stuff in there. So they would just
Oh,
rent them for 6, 8 months. And because it was cheaper to do it that way than to reconfigure the whole building for cooling.
yeah, it's interesting.
Yeah, no, when he told me that, he said, you're the one that, he said, he's the one that figured it out that needed to happen because computers would start tripping out and he, rather than retrofitting the building, just wheeled in the coolers for 6, 8 months. And, I was like, wow. Yeah, well, one of the probably the best guy I ever worked for. He's a great guy, but yeah,
Yeah.
we had a lot of fun together. But there's always a solution, right?
There's always a solution. It's like the office space where everybody started working from home. I mean, I do,
Yeah,
which, sometimes you don't leave the house. It sucks.
yeah,
But,
that's a whole nother set of problems.
that's all, yeah, people are getting weird out here, Scott.
Yeah,
Yeah.
They are, yeah.
But all this office space, last time I was in Chicago, I was talking to somebody, they pointed a building, and it was just like regular office building. That's now a bee farm. Like, what? And they just literally just started farming, bees, like a whole floor of just bees farms in this building.
Wow.
And then they had other vegetables and stuff at different floors, so they'd actually go and pollinate them, and they made a whole ecosystem out of it. I was like, oh man, that's
Really?
kind of brilliant. All you need is
Yeah.
space and water, and I get some lights in there. There you have
I
it.
guess so. For the bees, they got to get some sun and stuff. They probably. I
Yeah.
don't know. Wow,
I
that's.
mean,
I
I'm not a
mean,
biologist, but
yeah, no, yeah. I wouldn't know the first thing about it. I'd probably go into anaphylactic shock or whatever. I get stung all my time. But try to stay away from that. But no, there's always a solution. That's a pretty, I would imagine a lot of these, buildings, office and stuff like that, especially the larger scale ones are going to need to be repurposed, and they could be repurposed into some of these data centers and stuff like that. Because they already have everything right there. They just need, really the main thing they would need is cooling. And they already
cool.
had
Yeah.
IT rooms and spaces in them already. But
Fiber optic cables are there.
There.
Yeah. Power's there.
well, power's there, everything's there. So there's always something. And you see, like with the shopping malls and everything else, that Amazon's buying a lot of them as shipping,
Yeah.
transshipment and stuff like that, because the loading dock's already there, the power's there. They're centrally located in the middle of town. It's that last mile of service that's can be the most complicated.
Yeah. Like those, not even the big ones, but those micro centers too, which are, 20,000 square feet or something, not huge, or less, 5,000 square feet. And then they just have certain things there that are, that we can get a delivery in like 5 hours, instead of waiting 2 days now, which is awesome.
Yeah. Amazon today. It's pretty impressive, which I don't necessarily know if I need my hair gel and comb in an hour, but hey, if I can, why not?
Yeah, if you can, why not? Yeah, exactly. Not waiting.
I
Not
could
leave this
probably
house.
go to CVS. It'd take me like 8 minutes or whatever. But if I don't need to leave the house, that's not leaving the house is probably a whole nother thing too. But I'm seeing where we live. The large scale office is getting kind of scaled down, but like these smaller offices, like the 2,000 square feet and above and below, it seems to stay full.
Yeah.
Yeah.
Yeah, there's definitely people there, and there's benefits. I think there's really big benefits to going to work and working with other people.
Yeah.
Being in the office. It's nice being home, especially if you have a family, and you can help out. And let's face it, a lot of times when a lot of places you work and you're not fully gamely. You're not employed all the
No,
time.
you're really not. I mean, I worked in the corporate world, and most everybody was productive enough, which I would say
Yeah.
probably everyone didn't need to be there 40 hours a week.
Yep.
But a couple days from home probably would work. But it was a tech company anyway, so most of the stuff what we did didn't need to
Yeah.
be there. But the team meetings and all that stuff is very important, and it gets to a point where working from home all the time is you have to force yourself to go and interact with people, because if not, then you start to get a little more complacent and a little more short with other people. I think you
Yep.
don't know how to deal with people as much, but that also builds into a lot of the stuff you're seeing in real estate. Are you seeing in some of these multifamily developments and stuff like that? Are you seeing where they're a lot more like single units, or one bedrooms, studios and stuff like that? I'm seeing
Oh
some
yeah.
areas,
Yeah, it's yeah, one or two. But a lot of these places, yeah, they're just building and they're a whole building of just one bedroom units now, or a flat studio, which is
yeah,
interesting. But
yeah. And
downsizing.
I think that will probably help to bring the cost down also, because if you're building more
Yeah.
of those, it'll probably bring. So as far as your fund, your focus is data centers, and are you doing other types of ground up construction in there? Is it mainly development, or is it some value adds and stuff in there as well?
Yeah, value add and development. Right now, we have a problem with affordable housing, and that's a simple supply and demand issue, right? So the stuff President Trump is talking about, we're making it easier, extending rates out for 40 years. That's just going to cause more demand, but we don't have the supply, then it's going to get more expensive, right?
Yeah,
So the only way to fix this, I'm sorry, is to get more supply out there. And to me,
yeah,
that's cut red tape. So yeah, do a lot of development. Also do some AC rehabs of a property acquired and rehab it, put it
yeah,
back on the market. Never going to get away with that, away from
yeah.
that, excuse me, because that's stable. It's going to be there forever. You can depend on it. There's not a lot of downside risk when you're talking about affordable workforce housing.
Yeah, I would agree. We really need a supply solution, because there's no other way. I mean, I think we're going to be 4 million units shy by 2030, and we're still not building enough now. So it's probably going to be more than that. So I think as you see builders building smaller units, there'll be the rent will be less because it'll be smaller places, and then they'll probably start building smaller homes that you can buy, because I think that's going to be part of it, and you can build more per acre and more per development. That brings the cost down, but it really it's going to take a lot of things with rates plus a lot of regulation, and certain places have already overbuilt, so those still have to kind of level out. I think in Austin,
Yeah.
Texas, there's still a ways to go there.
Yeah, I think it's number one in the country for the rates going down, or rental rates, house prices going down, when everywhere else has been going up, pretty much everywhere else, just because they put so much supply.
What if
So
you
that's
could buy your first investment property in just 30 days? With a proven playbook built by a pro with 25 years in the game, it's not just possible, it's a plan. Scott Kidd's complete bundle gives you everything you need. 7 professional tools, delivered instantly, no fluff, no guesswork. Just the exact roadmap to your first property. From yacht captain to managing director of capital markets, Scott Kidd has navigated deals most investors only dream about. Now he's handing you his full playbook. If you're a high earner who keeps researching but never pulling the trigger, if you feel overwhelmed by the process, this was built specifically for you. Virtual walkthrough guide and the napkin deal calculator. Inside, the 30-day checklist property locator playbook. By box builder, market scorecard, agent vetting script. And right now, free bonus access to all tools, including the portfolio investor clarity tool. Visit investwithscottkidd.com and get the bundle today. Your first property starts now.
so that's a uh, case scenario right there. Got to put
Yeah,
more
it's a
supply out there.
simple math. I mean, Austin was really hot the last 5 years, and they
Oh
put
yeah,
out a lot, and they did all over Texas. They did, but Austin was very unique in that they really built really fast, but it's going to take some time before there. And you're seeing a lot of stalled out projects that are coming online. Are you seeing more projects like that that are kind of midway or partially entitled and kind of?
Yeah, especially with how much the rates have changed over the past few years, or how development costs and labor costs have gone up. There's a lot of projects that I've seen that have changed their scope quite a bit, where it was a 5-phase plan and now they're only doing 3 phases, because just what it cost 5 years ago or 10 years ago when you started this phase process, we're in a different world now. So
yeah, we're definitely seeing a lot more projects that are semi-entitled or several phase projects like you're saying. But the good thing is that they did have several phases, and they probably land banked the last two phases for a while, or sell them off to someone else so that they have options. Because if you build one big monster project and you're in the middle of it, you have to keep going until you're done with it, or you're lost. It just depends. And I think these smaller type projects will probably be easier to execute going forward.
Yeah, I think so too.
Yeah,
It's definitely makes a huge difference.
yeah. And as far as like your fund, what is your your thesis going forward? Are you going to move completely into development of workforce housing as things get a little easier, or are you going to kind of move where you think it needs to be? Or are you going to go towards like more Class A stuff, or what's the?
Yeah, I'm going to stay away from Class A. So let's say there's going to be, if you listen to Robert Kiyosaki, right? He's been saying we're going to hit a recession for, I think, since 2014, right? and I'm not making fun of him, right? Just yeah, brilliant guy, one of the best books ever about real estate, But no one knows when the next downturn is going to happen, right?
Yeah.
Are we in an AI bubble? I don't know. A lot of people say no. Some people that are a lot smarter than me say yes. So when the next downturn happens, Class A is the first place that gets hit, right? Because often, you can't afford it. You go down to Class B, and Class B goes to C. So so that affordable housing, workforce housing, B and C, it's very stable. Again, that's kind of my thesis is we're going to stick here. There's also a ton of grants, local incentives. So we have a project in Pueblo, Colorado right now. Typically, I'm a numbers guy, right? So this is how my brain works. But as typically, the amount of capital, amount of cash you bring to a project is about 30% of the total price. You get the rest financed, roughly, right? For that one, we only need to bring 12% because of all the tax credits, the historical tax credits, the new market tax credits, the low income tax credits. There's now a middle income tax credits that's associated with it. There's brownfield grants that are associated with it. So we just stack all these incentives because they need more affordable housing, and they want to revitalize this area. That now our profile is de-risked tremendously. So now it's a lot easier to invest in something when you only need half the amount of money that you thought you would, and it's de-risked. You know what I mean?
Yeah, definitely. I would imagine you're probably getting a lot of the like ESG financing and stuff like that, where you're getting PACE loans and stuff like that. And talk a little bit about that. I mean, how does that basically work with the PACE financing?
Oh, it's a pain in the butt. Anytime you get the government involved, or it's a pain, right? But that's why you get a good team around you that's done before, and you just do it over and over again, and you just work with the right people. We've changed. We used to do everything in house, all vertically integrated, right? We had our own property management company with 1,200 units. That sucked. I don't, God bless the people in property management. That is a rough job.
Yeah, that is, hats off to them. God bless them. And thank you for your service.
Thank you for your service. Yes, exactly. But now what I do now is the GP stakes. So I come in, I co-GP. I find these people that are the best in the world at development. I find people that are best in the world at finding these tax credits and doing that stuff, and then partner with them and work hand in hand. So all I'm doing is leveraging other people's experience and their capacity to do stuff. So the partners I have in Pueblo, Colorado they've done 10 billion in development. They do this every day. So
Oh, nice.
I've helped out with it, and it's a giant pain, but as long as you're checking all the boxes and patient, it pays
Yeah, I
off.
would imagine patience and everything. It's probably a pretty big checklist, and there's probably a lot of hoops to jump through to
A
get it
lot of red
done.
tape. Yeah.
Well, but
Yeah.
I guess at the end of the day, if it makes the project work and everybody that's going into it understands that this is the timeline, that it's probably okay. I mean,
Yep.
probably, I know with, government, I know there's Fannie and Freddie loans and stuff. Sometimes they can take, the agency loans can
Forever.
take some time. And, you tell them, hey, we need to close by this date. Yeah, we can probably
Nope.
make that.
Nope.
Nope. 3 months later. Yeah, we're
Yeah.
almost there. We're gonna need these Form A, the pink one, and the red, and this
Yep.
one, and
Yeah.
that one, and that one.
And you probably already sent those, but now you got to get it to this person because
Yeah, yeah. Because the next person that's looking at the file needs to look at the whole thing, and he
Yeah.
can't find X, Y, and Z. But or the other guy, he got fired or he got promoted, left the job, something. You got to start all over. Yeah, it's interesting, but it's I'm really thankful and grateful that there's a lot of these programs out there because they incentivize people as developers and stuff to build more and revitalize a lot of these areas and stuff. And are you seeing more of these programs coming online, or do you think there's probably gonna? I know there's a lot of recent government cuts and stuff like that. Are you seeing any effects from that?
Yeah, absolutely. Some are good things to happen, right? The depreciation went up to 100% again. That's great for development, for investors. Some like the CDBG block grant, pretty much got wiped out by the big beautiful bill. A lot of that stuff was allocated before and is still sitting localized. So you still get access to those funds if you apply for it, but the funding for it has gone away. So I think it's a mixed bag. When you're doing this, when we're in space, we're always going to be subject to the next president or the next politician and the local mayor. And
Yeah,
yeah, and when we're doing you're up there, you're dancing for a dollar to raise capital from people. And then you're also going to go shake the mayor's hand and dance for, his or her, support. I remember, I'm not a big politics guy.
me either.
I won't say where this was, but I remember I was in a meeting with somebody, and then they were running for office, and they would not even talk to me about the project that they wanted to build unless I maximized my donation every year.
Oh,
So
extortion. Extortion. That's interesting.
I have best pride,
Yeah, that's
Yeah.
extortion. Yeah, yeah. We'll
So,
just hold this and I won't talk to you until you do what I want. Yeah.
exactly. So unfortunately, that stuff is still around.
Yeah, I mean that's kind of just unfortunately it's the world we live in, and I mean it's you got to play ball, I guess, with some of those things. I'm not a politics guy either.
Oh,
I'd rather you and I make an agreement, and this is what we're doing. That's it. You do this,
yeah.
I do that. Let's get it done and move to the next one. Yeah, but it's
That's what I love about the space, though, Scott. Like when we're in the space we're in, real estate with investing, whether it's data centers or whatever else, it's a relationship game. So rarely do people want to screw each other over because everybody kind of knows each other and everybody wants to work together to create something.
Yeah, and it takes a team. It takes a team and a lot of relationships, and that was my transition from the yachts and stuff, and just being a captain for a long time, and still doing that I was always good and fortunate to be able to build good teams, and like yourself, where you plug in, where you fit in. Oh, these guys need this. Okay, I'll get this and that,
Yep.
and then everybody that is in the commercial real estate or development or what have you, they realize that it takes a team. They can't do it all themselves. I mean, there are teams out there that want it all for themselves, but that's a whole different thing. I had a meeting one time where it was about a high level golf course, and this one group came in and said, "Well, we would just come in and buy it. We don't do deals with anybody else. It's just us five, and that's it." And I'm like, "Okay, well that makes sense. You know, if you want it, if it looks good, then it's your baby or whatever." But there is that, but the rest of it is it's fairly, as going forward, as we're seeing that there's not a lot of secrets anymore. Going forward, people are a little more transparent, whereas before a lot of things were the best kept secrets.
Yeah. Yeah. But it's all about those relationships and getting in the right room and meeting the right people. And all of a sudden, your world, your access just explodes to different opportunities. Yeah.
Yeah, it definitely changes. You get in the right room and then exponential growth. I mean, I didn't, like 5 or 6 years ago, I didn't know most of the stuff that I'm doing. I knew it existed. I didn't know it was accessible to me. And, the first guy I worked for that gave me my first captain's job, he's a developer, they're a billionaire family, stuff like that. And they, it was all pre the Jobs Act of 2012, where before that it was all, it had to be me calling Jesse going, "Hey, I got this." You had to be invited in. You couldn't advertise. You couldn't solicit investment or anything like that. You couldn't speak to anybody about it. But after that kind of changed, where people could advertise and go out into the normal public, where now you and I can go and speak to other people, provided we're working on the correct type of deal, correct structure, 506C. Reg D and exemption. But before that, I didn't know. I mean, I even had investors that I took around on the boat, and I didn't realize that was, I mean, had I stayed with them, probably I would have learned more about it. But at that point, I was busy being a boat captain. I didn't really, I was focusing on my career. I learned some by osmosis, but that's one of those things where I wished I would listened more when I was younger.
Yeah, I've got a lot of those too. Got those from last week too. I had calls with people. I'm like, "What are we talking about?" Yeah, because there's opportunities, but also you have to be able to say no sometimes, and I think that's more powerful.
You have to probably say no more times than you should. Then you end up doing. I know I've been guilty of that, doing too many things at one time. Then you end up not doing any of it,
right?
Because you get burnt out.
Yep.
Yeah, that's so going forward for the next 5 years, what's going to be the main focus of your fund other than the workforce housing and the data centers?
Yeah, workforce housing, data centers, and then there's some AI software, SaaS type things like I was talking about, the deterministic AI. We just launched a grant, authority.org, which is actually has it has the largest database of grants in the US or around the world. It has 180 countries in there, and that gives people access. Actually has AI driven, so it takes your information and then we'll connect with the right grant to you. It's all about access, right? Again, it's how can we give back or get money into the people's hands that need it the most and who are doing the most. And that's for-profit churches, hospitals, and nonprofits. So it's pretty awesome. I'm actually pretty proud of how that turned out.
Oh, that's really cool. And what do you like as far as explaining a little bit of the difference between like a SaaS and software company, what that looks like if you're investing in that compared to a real estate syndication?
Yeah, so with real estate, you most likely know what you're going to get. Usually, you're getting some 8% pref return plus, part of the promote, the percentage, and it's pretty stable usually. Right. There's the last few years it's been kind of wonky, but it's been usually quote unquote. But historically,
are you investing blind? Most passive investors don't know what questions to ask, and it costs them dearly. That's why I put together 125 essential questions. The ultimate due diligence checklist for apartments, syndications, and funds. Cover every critical area: the operator's track record, the loan structure and refinancing risk, risk, property condition and capital needs, market demographics and competition. Ask things like, how many assets have gone through a full cycle? What is the loan-to-value ratio? What is the break-even occupancy? This is the checklist sophisticated investors use, and now it's yours free. Get instant access at investwithscottkid.com interactive. Trackable, exportable to PDF. Protect your capital. Invest with confidence.
Historically, U.S. real estate's been the best asset class of all time. When you look at SaaS, when you look at especially AI, do you have the potential to hockey stick and quadruple your money in a month? But you also have the potential of choosing some dinkers, right? There's as a venture capitalist, right? They'll invest in 100 companies and hope for one to do okay.
Yeah,
that unicorn. So
yeah.
So that's the investment. It takes a different type of person, but when you do get a unicorn, it's exponential. It's insane.
Yeah, I guess the upside can be extreme. I know somebody I was speaking to a while back that they were raising money for a software company, and they said, well, the company started to make money, but it started making money too soon, so it lowered their valuations. They couldn't go out in the market and get as much money, and that it was like a Series B round or what have you. They needed to kind of, I forget what it was, but he explained it to me. He's like, no, we're not supposed to make money yet. And I'm like, really? Because if I did that with like a real estate deal, I'd probably go to jail.
Yeah, we don't want to make money here. Yeah.
I think that would be like, it's like, sorry guys, we're going to take your money, but this real estate is not going to make any money. I mean, granted, in development, you're not going to make any money for a couple of years or what have
2
you.
years, 3 years.
But that's pretty, it's explained multiple times in the whole, back to some of the PPM and the operating agreement and all that stuff. But software is a whole different animal but the upside can be insane.
Insane. Yeah. So I'm dabbling in that. I don't do a ton of that. I just want to stay focused on what I know and what I can do. I like AI the data centers because it's a mixture of the real estate, but it's also almost like this M&A, mergers and acquisition of, who's the outtaker, who's the hyperscaler, who's the Mag 7, Microsoft or whomever else, who's going to purchase or, be to the least part of this. So it's interesting.
Yeah, that's pretty interesting. You're actually still buying the business with the real estate and stuff like that. So it's kind of interesting. It's an added dimension to it. I mean, I would think it's probably similar to like what we do with our medical office, surgical centers. We're partnering with the business, but we stay out of that's their whole deal. We really just build a shell, but without them, we don't speculate. Without them pre-leasing it, we don't could get involved in any of it because we don't know where it's going to be the best place for a surgical center, and they do all the studies and everything like that. And I would imagine the data centers, they do the business, the guys that are really high level, they go through and look at the power, look at the cooling, look at the demand, look at where are you going. I mean, they're probably doing a 10 and 20 year projection, I would imagine.
Oh yeah. And some of these contracts you sign with these guys are 50 years, Yeah. It's interesting. It's just a lot of more components to it.
So basically you have the data center leasing the space. Is it a long-term, like 20, 50-year lease, or is that kind of how it works?
Yeah, the one I'm working on right now is a 50-year lease.
Wow.
Yeah. So just like commercial real estate, you get that triple net lease.
Okay, and it's probably with triple net lease with a corporate guarantee, and then also inflationary rent bumps or lease bumps every 2 to 5 years or something like
X
that.
amount of time. Yeah, and then you got to figure out who's going to pay for it. Michael Burry, right, the guy who predicted the crash, right, in 2008. He's real hawkish on the AI bubble. His whole point is, hey, the chips aren't going to last more than 3 to 5 years. And of course, everybody else says they will, but then, I don't know, just look at how much has changed in the last 5 years. The chip might be fine, but, the capacity not be there. So then how do you...
what about everything else around it? Like I know the high level chips, the just the fact of the amount that needs to be produced is a whole another factor.
Right.
There's so many different things that go into it, and I don't think AI is at a point where it can figure out what the solution is yet, because it's basically like in its infancy, where it's like a baby that we're feeding, and
Yeah.
feed it is what it puts out. So if we're feeding it garbage, it's going to
Garbage in, garbage out. Yeah.
But I think it's come a long way just in the last 2 years.
Oh yeah.
And I would think it's only going to keep getting better and better. But this has been really great. I really appreciate you sharing your time here, Jesse. For people that want to find out more about you and what you're working on, what is the best place for somebody to find you?
Yeah. Best place to find me is either going to be on LinkedIn, Jesse Sells, JSSESELLS, or impactgrowthcap.com.
Nice. Well, really appreciate you coming on and sharing all this with you. I look forward to catching up with you later on and seeing where the journey takes you.
Yeah. Appreciate it, Scott.
Yeah, thanks. Once again, this is Scott Kidd, the Yacht Captain Investor Podcast. Just a reminder that the best investment you can make is the one you make in yourself. So invest heavily in yourself. We'll see you next time.